Oh,
You
yeah.
have to sell the house, John.
That's that's what we were thinking about doing.
You don't have a
Is the
choice.
biggest expense?
Yeah, you
Yeah, your
can't.
your house pays
Uh,
50% of your take-home pay, hon. You can't do that. That's why you're dying.
Yeah.
So this video by Dave Ramsey, I wanted to give you guys a little bit of a background on the situation here. Basically, his payment's $2,090 a month, and his take-home pay is $4,200. Theoretically, on paper, this individual can afford this house. It is about 50% of his take-home pay, which is actually well within guidelines. Guys, when we get you guys a mortgage, we never ever look at take-home pay. I don't care what take-home pay is. Every person across the United States is going to have a different take-home pay depending on the state, the county, the dependents they have, etc. If you have a pension, if you don't have a pension, if you have benefits getting taken out, we can keep going. But everybody's different. So we look at gross pay. If you're getting a mortgage, just remember, if you're ever on the conversation with me, or if you're getting qualified for a mortgage, we only look at gross pay. This guy telling me that his I believe he said a $4,200 a month is his net pay. His gross pay is probably at least $6,000. So a guy at a $6,000 income with a $2,090 payment, that's close to a third. So that's going to be called your DTI, or your debt to income. So his debt to income is going to be close to 33%. Or look, a third of his actual pay is going towards the mortgage payment, which is totally okay, totally within guidelines. And it's very normal. A lot of people have like other people in the house that are contributing in some other way or helping to kind of pay the house. So again, this is totally okay and totally normal. If you guys are in this situation where half of your take-home pay is going to your house, I hate to say it, especially in today's society, the way that interest rates are, the way that home payments have gone up, or home purchase prices have gone up, this is totally normal. Number two, Dave Ramsey said you do not have a choice. Obviously, guys, that's an incorrect statement. You do have a choice, and you got a ton of choices. First and foremost, I would meet with a mortgage professional. Let's figure out how you could potentially refinance this loan in order to get yourself into a lower payment. We could look at interest rates. We can look at re-amortizing the loan. Again, things that Dave Ramsey preaches against. He hates 30-year fixed, and obviously he hates, refinancing when you don't have to. But in this situation, if you do want to eventually lower your payment and get into a better financial position, it might be beneficial for you to refinance. I wouldn't suggest selling until you've gone and crossed off all your options. And if you're a guy or a gal that's in this position, you can contact us. Let's see what options that you do have out there, because I would hate for you to listen to advice similar to this and end up having to sell your house when you really could have stayed in that home that you really love. Or potentially move out, turn it into a rental. You never know what your options are. So anyway, guys, if you need some options, and if you're in this situation, number one, it's totally normal. And number two, you do have options when you're in this situation.